Robert Gardner is chief economist at Nationwide and joins us now. Mr. Gardner, welcome to Bloomberg. I suppose it's more of the same. UK housing just can't seem to break out of this torpor.
Yeah, unlike most asset prices, UK house prices have been remarkably stable, no matter which way you cut the figures. If you look at the month-on-month change, as you say, they were up just 0.1%. If you look at the year-on-year change in UK house prices, they were down just 0.3%. And the three-month change in house prices was flat as a pancake at 0. So UK housing market has been incredibly stable over the last sort of 12 to 18 months. And to be honest, that's a pattern we see being maintained. Prices probably moving sideways, maybe slightly lower in the period ahead as well.
Now, what about supply? Because we're also hearing about, lack of growth and that sort of thing, projects being cut. Now, might that actually help supply and actually help prices in the medium to longer term?
Well, what we've seen over the last 12 to 18 months is a situation where both demand and supply in the housing market have been incredibly weak. On the demand side, obviously the weak economy, the weak labour market has weighed down on demand for housing, but at the same time we've had real dearth of building over the last 2 years, very little building activity done, and also very little in the way of distressed sales, thankfully, as a result of very low interest rates. So what we've had is a picture of very weak demand, but very weak supply as well, but demand and supply being fairly well matched. And as a result, prices have basically been moving sideways for the last 12 months or so. So you're absolutely right. Yes, there's weakness on the supply side, but there's weakness on the demand side as well, and they've remained fairly well matched.
OK, Robert Gardner, chief economist at Nationwide. Thanks very much indeed.